I've been in business and investing for over 35 years. I'm going to go over the most important lessons that every investor needs to know. The first one is sales is not required. So I know this is counterintuitive to a lot of people because there's all kinds of sales trainers and all kinds of stuff focused around sales. But in real estate and most investing, it's not really selling anything other than painting a picture and using math. So most investments are all done on the back of a napkin at a bar or a restaurant. Most people understand investing at a high level. If you actually have to sell something so hard that it's probably not a very good investment. There's a saying that we use around here called, the bigger the brochure, the worse the deal. And I think that's important to understand, is the bigger the brochure, the worse the deal. In other words, the more paper and the more data that you need in order to sell something, typically it means the deal is not that great. Most investors understand the simplicity of something. For example, for a lot of you guys know, I started buying billboards years ago. It's quite simple. Billboards are two sides. Traditionally, that's the way they usually are. Those are called static. When I tear down that board and put up a new one with two flat screens, as an example, I now increase my advertising capability by 10 times. The reason is because that produces more ad revenue. It's quite simple. There's 10 times more ad revenue when I take a static board and turn it into a digital board. So people understand that concept. It's quite simple. So when I'm trying to raise money for billboards, as an example, people get that. Same thing with real estate. There's forced equity that everybody understands. The rents in this area are here, but the rents on this property are here. Everybody understands that. When you start to use math and just show how the deal will work at a high level, that's actually how you raise capital. People invest in deals. They invest in people. And so a lot of people think there's a real sales process like there might be with wealth management or something, but this is not how that works. Real investors know how to invest in real deals, and there's no real sales process. You do, however, have to paint a picture. You have to be able to portray a story of what you see, what the vision is that you're actually trying to do, so that you can articulate it to whoever it is you're trying to have invest. That's different. But it's not a sales process. It's your vision and how you're going to pull the whole thing off with your team, with the market, and all those kinds of things. The second one is wealth begins with thinking. So the real issue is most people think about lack of money. That's how I grew up. That's how most people are there. Most people are operating from a scarcity standpoint. So how do you take the lack of money or that scarcity mindset and turn it into an abundance mindset? And this is thinking. And what happens is the middle class believes that you need a real solid formal education to get ahead. And you might if you're poor and you're trying to get to middle class. But if you really want to be wealthy, then you actually need to study the wealthy. The wealthy doesn't care about degrees and certificates. It never comes up. The banker doesn't care about your certificates, what degrees you have, or what grades you have. They just don't care. Your financial statement is their report card. That's how a banker thinks. That's how the world thinks. So the world looks at your financial statement and your financial literacy, and that's what they invest in. Because if you're asking for people for money, you need to understand that. This is about being generalized, not being specialized. I think what college does and what a lot of education does, it boxes you into very specialized things. The world rewards you for having generalized knowledge. If you study the wealthy, you'll become wealthy. If you study their habits and the things that they do with investing for cash flow, with investing for tax purposes and those kinds of things, you will become wealthy too. This really has just mostly to do with changing your own mind about lack of money and how to make it, how to invest it. One of the things I learned along the way is that real estate investing is not for the rich. I believed this when I was in college. I believed I would never be rich, and I believed that only the rich had access to deals, and that's just not true. What happens is, As you start to become financially literate, and you start to recognize deals and you start to find them and you start to bring deals to people, then the rich come out of the woodwork because they're trying to invest their money like they always have with people that can actually make them money. That's how the system works. And by solving the problem that rich people have, most people invest in Wall Street as an example, and they have no idea what they're investing in. So if you could actually show them a better way to get cash flow, to get tax benefits and all those kinds of things, in a lot of ways, Wall Street actually makes people really stupid. Their whole strategy is based on hope. So if you come along and you show them a really good deal that cash flows and they get great tax benefits, you're going to have people invest with you. So real estate investing is not just for the rich, but it's where the rich put their money. And you can easily be that person to help solve their problem. Another one is the understanding of the difference between truth versus facts. Fact is reality, and truth is the perception of reality. Truth is often based on your own personal bias, on how you see the world. Facts are facts. Facts are not feelings. I think what happens a lot of times, especially when people come from their own bias, they're selling a lot of times. They're selling based on their own individual truth. You all know what I'm talking about here. You see it every single day. You might not see it in the investing world, but it happens in the rest of the world, whether people are talking about their health, whether people are talking about their relationships, whether people are talking about whether they like where they're working. It doesn't really matter. Facts are reality, and the truth is the perception of reality. So as you're trying to figure out the difference between facts and truth, the key is just asking really good, deep, open-ended questions until you start to dig to the actual real facts. You also don't need money to start. Now, I know a lot of you probably started just like me, where you believed that you had to have a bunch of people because it felt comfortable to say, yeah, I'll invest. The thing is when you go to those people and you say, hey, if I find a good deal, will you invest in it? They're going to say yes. They actually need to see a deal before they can decide. So the reality is you got to find something that makes sense financially, and then you bring it to them. And most of those people, they're not going to invest anyway. So it's a waste of time. The key to everything is finding good deals. There's way more money than there are deals. And investors invest in you. They invest in the deal itself. Only lazy people use their own money. If you don't believe me, then why do you use debt? Because debt is not your money. It's somebody else's. When people put money into a bank, it's called a deposit. That bank has a problem. It's a liability. It's an expense to the bank, to the depositor. Then that bank lends the money to you. It's called OPM, or other people's money. That is just one piece. You can do the same thing for equity. It's just called equity. Money's money. It does not distinguish what it wants to be called. It's either debt or equity. So you can do the same thing with equity. You just raise all the money for any deal that you need, and then you take a piece on the back end when all the investors are paid back. So lack of money, or not being able to raise money, or not having money is the number one biggest excuse that I found that most people have. And you do not need it. You just need to find a great deal, and then you'll be fine. If you don't know, I run MC Companies. We have over 300 employees, own over 10,000 apartments, and have transacted over $3 billion in real estate transactions. Over the next 12 months, I plan on buying over $1 billion of real estate. I'm going to be doing a free webinar on June 25th, going over exactly what we're doing as a company. You can click here to sign up. Most of the world is financially illiterate, and Wall Street preys on this. Wall Street preys on Main Street. If you don't believe me, what do you think the purpose of a bank is? What do you think the purpose of an insurance product is? What do you think the purpose of a 401k is, or a pension? It's literally takes money out of the working class or Main Street and invests it for you. That's the system you're in. And once you understand that whatever it is that you're trying to do, there are other people that want in your pocket and want to invest your money for you. That is the system. That's how Wall Street is set up. That's what wealth management is. That's what financial planners do. They all convince you that they're better at investing than you are. That's the system. It's not worth getting upset about. It just is what it is. Anyone who starts to understand the game and the system that we're in and emerges, they're the ones that are going to have the advantages. You can operate just like Wall Street is operating. It's not that hard. You think about who the financial planners and wealth managers are. They're just young kids. They're being harvested. They're just working for commissions and tips. And essentially, the whole industry is just pulling people right out of college and making those kids just commission salespeople for the working class. The next one is the difference between logic and emotion. Now, most amateurs focus on logic. Now, you do need, don't get me wrong, you do need strategy and goals, but most amateurs are motivated by logic. And you see this all the time, especially with degrees and certificates and all of those things. Super logical. You see this with doctors, for example. They're very logical people. But the professional, they weave in emotion. Professional uses emotion for motivation. And the professional uses both. You have to have logic, which is where the amateurs focus. But the professional weaves in both emotion and logic. You need a mix. Emotions can be confusing, and this is why an amateur discounts it. But a real pro uses both. They use logic and emotion, and this is how they motivate. This is how they grow their businesses. This is how they encourage. This is how they show vision. Whereas amateurs use pure logic for every single step because they're just afraid to make a mistake. So if you think about it with sports, you need the logic and you need strategy for the actual fundamentals that people use. It doesn't really matter the sport. But emotions, that's what actually wins championships. So you have to have both. The next one, of course, is just to be curious. Now, this is an interesting one because what I find is most people have a very fixed mindset. When I'm talking to them, they're defending their own position, generally. They're not actually listening. They're not listening to understand. And what I learned probably from the best mentor is Robert Kiyosaki. So when Robert and I get on the phone, whenever I call him or see him, it's the same thing. I always know he's going to ask two things. What are you reading? And what's the last seminar you were at? And then, of course, from there, the reason he wants to know those two things, what did you learn? What Robert's always trying to do is change his perspective on his own personal belief. And I don't think most people operate that way. What most people do is they're defending their positions and they're not really listening. So when you're listening, you really need to listen to understand, because what we're trying to do, what I've always tried to do, was listen to somebody else's perspective, not to have a full buy-in, but to actually change mine, because it's possible, isn't it, that somebody might have a better idea than you. And if you can take that on, then of course you now own that and you've refined your own position. This is one of the most important things, being open-minded and not being so fixated on your position. You guys see this each and every day on scarcity and abundance. So when I grew up, my parents grew up really poor. And so my mom and dad used to say, we can't afford that, we can't afford that, we can't afford that. And at the time, that was true. But then I had to change that to how can I afford that? It's a very subtle change, but it's really important. Instead of looking at something like you can't, you should look at something on how you can. And that is a very important perspective, and you should be doing that with every single thing that you're doing. The next one is working for free. Most pros don't require immediate financial gratification. So I see this all the time. I got people that come work in my company all the time and they say, I'll work for you for free. Why would somebody do that? It's because they know that they're going to bring value. They're here for a reason to actually help themselves sharpen their own tools. You know that's almost an instant yes because there's no financial burden to me. But really, what that individual's trying to do is they're trying to actually sharpen their own saw. I see this a lot with a lot of younger kids, but most people take a hard position that if I'm going to go somewhere, I need to be paid. There's nothing wrong with that. I just want you to know it's a very limited position and you're trading time for money. Whereas a lot of people are looking at the longer term. They're looking at how can I get ahead? How can I be around people that are wealthy already? How can I be around people that I deem as successful? And what can I learn from them based on their knowledge and wisdom? It will help me move along faster on my own individual track, whatever that might be. The best example of this is when Ross and I first got together over 25 years ago. We believed that if the investors win, we will win. So every deal that we bought, we said once the investors can get paid back, then we participate in the upside after that. So in other words, we put the investors first, which we still do, and then we get compensated. So the deal has to work. Essentially, we put the whole deal together, raise all the money. And in the beginning, when I first started this business, I didn't have a lot of money. I did it for what's called the sweat equity. So when the investors get paid back, then I get paid after that. And sweat equity might eventually be zero, or I could do really well with it. I could wait 1 year, 5 years, even 10 years before I start to make anything from something. But it's a long-term approach. It's a win-win. The investors invest because they get the free cash flow, and then I get paid over that. So what amateurs do is they expect payment for every single thing they do. So once again, money is a claim on your time. And an amateur believes that if they're spending time somewhere that they need to get paid. Stay away from these people because they're toxic and you are not going to get ahead that way. You have to break out of that and just understand who are your teachers. Pay attention to who your teachers are and glean as much knowledge as you can from them. And once you're outside the system, it'll be super clear. The next one is you can't manage your way out of a bad purchase. So I see this a lot. A lot of times people get emotional and they start to believe their own BS and their own sales pitch. Let's say it could be from the broker, could be the seller. So if you buy incorrectly, you might have to wait a long time, which is just what we saw over the last few years, because you can't manage your way out of a bad purchase. So anybody that bought in the last few years, the values are down 20, 30, even 40%. If you're in office buildings, it's even worse. So you either have to have a long tail and wait that out for a long period of time, but you just can't manage your way out of that property today. So whatever business plan you had around that property 2 or 3 years ago, that's off the table. Now you are faced with the decision either to give the property back or recapitalize it or whatever it might be. But you just can't manage your way out of a poor purchase. And I see this time and time again. The next one, which I talk in my book, The ABCs of Real Estate Investing, is that the market forces are stronger than the property. So the market is way more important than the property itself. That's why you always start with the market. There are market forces going on all around you. There's momentum happening wherever you are at all times. There are people moving in and there are people moving out, and all of those things have a lot to do with the performance of a property. So I bought property before where there were large employers that moved out a couple of years later. What happened was the occupancies went down and the vacancies went up in those properties as a result of market forces. So you have to be looking at population growth, employment growth. Where are people moving and why? What's going on in that particular area? Because that will save you. You first need to find that out. And then if you buy a property correctly, then that market will help take the property where it needs to go, and you will be able to get the equity, the capital gains, and those kinds of things from the property. So never start with the property and then sell everybody on the market. You need to start with the market and then sell everybody on the property. You need to be talking about the market because you could actually even make a bad purchase on a property, but the market can save you, just like we saw over the last few years. The right way to buy it is to first start with the market and then buy the property correctly, and then both will work together. My experience is that everyone wants fast money and fast results. And we've all seen this. Most transactions, largely, are inside of a year. Just look at it. Whether it's a lot of people are in the stock market, day trading, a lot of people are flipping houses, a lot of people are trying to buy and sell stuff within a year's period of time. The smart investor invests for the long term. They invest for cash flow. They invest for the tax purposes. But the majority of America is looking for cash on a short-term basis. And then what they do, because they're financial illiterate, is they're spending that money on trinkets like new cars and stuff like that. It's ridiculous. And then what happens is when the market turns, they're out of money because they've spent it on all these depreciating assets. When the true professional actually invests for the long term, they let the tenants or the customers pay off their debt. They let the tenants or the customers provide their cash flow, and they let the property or the investment provide the tax benefits for them to take them to wealth generation as opposed to short-term hits. Most people are looking for short-term cash and short-term gratification, whereas the professional is actually looking at the long game. So the next one is just understanding market cycles. So each real estate class, each investment that you're in has a cycle. There are times when companies are doing really well. There are times when real estate is doing really well, and also when it's not doing well. There are times when businesses are doing really well, and there are times when they're not doing well. Just think about businesses that are not around anymore, like travel agents as an example, or taxis. Whatever it is, there's a cycle for all businesses, and the same is true for real estate. Just think about office buildings like 3 or 4 years ago versus today. And think about multifamily where we are right now. Think about single family and prices being so high, creating an affordability problem, pushing more people into rentals. That will change over time, but these are all things that you need to understand. They're all individual cycles. There are contraction and expansion parts of the cycle, and you need to understand that. And what most people do is they believe for some reason that the past is going to predict the future. So they're investing and they're selling based on last year's numbers, when what they should be doing is being super critical and taking a look at all the market forces that can disrupt whatever the future might be. Because you're always trying to predict what you think that investment is going to do, what that business is going to do. And oftentimes you have blinders on. And you need to open your eyes and take a look and understand all markets have highs and lows, and all markets have cycles. Doesn't matter what business it is. Maybe it's a long cycle, maybe it's a short cycle, but it definitely has a cycle. And this, of course, is precisely why you make the money when you buy. Because most people that are in pain right now always seem to come in at the top of the market and they ride it all the way down. And then they complain and they say real estate doesn't work. When quite simply, all they had to do was do like what Ross and I did, is start buying a lot of properties in 08, 9, 10, 11, and 12 before everybody started jumping in and started riding that way back up. Another one is understanding the limits of money. Amateurs seek riches, and pros, they seek fulfillment. Amateurs seek a quick buck to fulfill a hole that they have, whether that's happiness or peace or whatever it might be. Whereas the pro actually seeks fulfillment. The pro gets fulfillment from the actions themselves, and the amateur focuses on the results of the actions. It's a very different way to think. Most successful business people keep an eye on their bottom line and their cash flow. Don't get me wrong, but they don't focus on the money at all. They don't focus on really how fast it's growing, and they don't keep a full account oftentimes. The amateurs are ultra focused on the actual results of the cash. I have such a big picture. It's often that I don't even know what our properties are worth, what they're cash flowing. I'm so busy focusing on the bigger picture and trying to grow the business that I just know if I follow the fundamentals, the cash will just keep coming in. And then every once in a while, because I should, is I actually sit down with my CFO and I take a look at all the numbers. But I never focus on the results first and then make decisions. I just focus on the big picture. And my fulfillment actually comes in driving the company forward. And if I do everything correctly, then the money falls to the bottom line naturally. The next one is most people pull back when things are going poorly. And that's actually what we're starting to see right now. They put their head in the sand and they're either in denial or they try to sell through it. There needs to be a reality check with those folks, and hopefully that's not you. Because really what needs to happen is you need to actually hit the gas and you need to plow through whatever the problems you might be having. The first thing is you need to come to terms and come to reality, have a reality check of how things are really going and why. Because until you do that, doesn't matter if you hit the gas because you're going to have some of the same results. You have to be super clear and articulate exactly why you're in the situation you're in, and then be very clear on the direction moving forward. There's no better way to gain momentum than to hit the gas, because sales solves everything. And sometimes when you feel stuck, all you need to do is just take that one step. And especially today, a lot of people are in this situation. Even us, we have properties that haven't performed the way that we wanted them to, but the solution is always to hit the gas and propel the company forward. The most people do it, the first side of the stress is they pull back and they put their head in the sand. Another one is you need to be a great communicator to your employees, to your vendors, to your investors, and to your vision and all of that stuff. And this stuff isn't traditionally natural. So it's very hard to become a great communicator, especially when things aren't going well. But I'm hearing right now one of the bigger issues that investors are having is they don't feel like they're being communicated to. And the stuff that they're being communicated on isn't entirely accurate or doesn't tell the whole picture. We all have ups and we all have downs. And what most people do is they promote themselves because of their ego on how great things are all the time. What they don't do is they don't talk about the mistakes they've made or maybe some of the roadblocks that they're in. They don't do that because of probably their ego. Oftentimes, they're just afraid to talk about their failures. The reality is everybody knows we have ups and downs. And so if you're able to communicate both, now there's nothing wrong with talking about roadblocks as long as you have a plan to fix them, because everybody understands that we have roadblocks. But most people just promote how great things are going and very rarely communicate when they're not. And so one of the things I've learned is no matter what's happening, you need to be a great communicator and let people decide for themselves. Full transparency is the greatest way to build trust. And if you're not doing that and you're just selling and never talking about anything that goes the other way, you're actually not going to gain people's trust. The next one is the difference between information and transformation. Most people want to know how to do stuff. Most people want the answer. You'll find that this is kind of a reoccurring theme in most people you talk to. Tell me what stock to buy. Tell me what market's good. Tell me this, tell me that. When really what they need to do, they need to focus on transformation. They need to figure all that stuff out for themselves, because if you're limiting yourself to other people's information, which could be biased, you're actually going to probably have a rough road. And so the minute you can actually move from just getting information to transformation, where you're actually developing yourself through things like personal development, or you're expanding your context instead of your content, the key to getting better and achieving mastery is simply to transform yourself in the way you think and not focus as much about the information and needing the answer. Because that's what most people do, is they want answers. They want to be told where to invest. They want to be told what markets to go into. They want to be told what to do. And that actually doesn't help anybody. This all has to do with the evolution of your own belief system. Intelligence definitely plays a part, but your belief system, that's the star of the show. So I've owned over 15,000 apartment units worth over $3 billion. And in that video, I've shown some invaluable lessons about real estate and the hard truths about the industry. I highly recommend you watch that here.